I know a lot of you are feeling uncertain right now. Maybe you're wondering if you'll ever be able to afford a home in today's market. Maybe you're a seller thinking, will I even find a buyer in this market? The truth is, the real estate landscape is changing and it's easy to feel overwhelmed.
But here's the good news: every season brings new opportunities. The transition from winter to spring isn't just about the weather, it's about fresh starts, new chances, and the right time to make your move.
If you're a veteran, a first time home buyer, or someone who's been waiting on the sidelines, we're here to give you clarity. You don't have to go through this alone. There is a path forward, and we're going to show you exactly how to position yourself for success.
You deserve a home that fits your future. You deserve options. And tonight, we're going to help you find them. Let's dive in.
Awesome. Well, thank you, Lourdes. So today, guys, we're doing another live event. And today we really want to focus around real estate. And I know a lot of our past live events we've done really like VA home loans and then real estate, but I really want to talk about real estate focus today because we are going to be talking about the shifting real estate market, right? Going from winter to the summertime, very different type of market. We're going to talk about what's happening today, and we're going to give some predictions for 25 and also provide some guidance for sellers, because the thing is that when you're looking at being a homeowner, you should really also understand what it looks like on the sell side, because you do need both dynamics. So you're not kind of stuck in this position of like, well, you may rush into buying a place. Now all of a sudden you're talking about selling your property. And then there's so many things you don't understand. And I know, Lourdes, we've come across that so many times with buyers. But again, this is great for sellers because right now inventory is somewhat limited, kind of causing that shift. So let's break down the first thing, what's the seasonal shifts in the real estate market going from the winter market to the spring market. What comes to mind when we bring that up?
Yeah, so I know that the housing inventory does change from winter to spring, and it really depends on your area. And I know, like in certain areas, it is all year round, but cold areas, I find that the winter takes a huge turn. It slows down a lot, and the spring market just starts to go crazy. But the winter market in certain areas, particularly cold areas, is really slow.
Yeah,
What do you
that's
think,
what
David?
that's what we definitely noticed. And even in places, definitely in the warm areas, like we do a lot of business down at Texas, Florida. This seems to be the time that things definitely pick up. The downside to some of these places is that insurance costs have gone up, which is another big thing for everyone that's out there. If you are a homeowner, this is kind of the season where taxes are going to shift. And when your anniversary of your mortgage comes about, make sure you're double checking that homeowners insurance, because what we've seen is that some insurance companies have dropped people from insurance companies, which is not good. And if there's a big increase, I know, Loris, you just went through that. I just went through an increase in my homeowners insurance, and I just dropped a video about Florida potentially statewide removing its real estate property taxes. And a lot of veterans commented on there like, oh, my taxes went up $10,000 because values go up and up, which is positive. But you definitely need to watch for those trends because it
Yeah.
affects you for when you sell. And for everyone that's out there, folks, if you have questions about real estate, please drop a comment. We're watching the comments. So definitely be able to talk about anything that you guys have. Between Lourdes and I, you got a dream team here to answer it. Lourdes, when it comes to coming into this 25 market, you know, I know right now we're kind of towards the end of February, and we have probably another month or two, I would say, in my mind, of good days, right? Where it's maybe not as competitive, and you have more opportunity. What do you see as an advantage for someone that's like on the sidelines thinking, should I buy in the next 2 months, or should I just really wait till the end of the year for this to make sense?
Yeah, so once again, it's very area specific. So I would talk to your real estate agent, or we have some recommendations as well. But talk to your agent and see the actual trends that are happening. So I had a client that said, "Hey, I want to purchase in May." And I educated them and said, "Hey, in this area, May is very competitive. If we go now and you have the opportunity to go now, you can possibly get closing cost credit. You can possibly get you can bargain a lot more right now versus when everybody is out there shopping." And people are also worried about the interest rates. Well, are the interest rates going to go low? Are they going to be stable? Are they going to be this? Are they going to be that? Well, in certain areas, home prices are still going up. And we're seeing some areas where there's a lot of inventory and we're seeing price reductions. So once again, I want to say definitely consult with your team of professionals. Don't let them just say this, show them. Like say, "Hey, I want to see the comparables. I want to see what's out there selling compared to this property. What does this look like? Was there any price drops? Was there any type of, how long were they on the market? And how much inventory was in that particular area for the last 3 months?"
Oh, 100%. And that's, I think, gives you a reality of the market as well. So I want to touch on two things. One, people ask me all the time, "David, what are interest rates going to do?" And I'll tell you, between you and I, if I knew exactly what day and time the markets would shift and we would see lower interest rates, we would all be filthy rich, right? It's very hard because various economic indicators could shift the market in a snap of a finger.
Mhm.
And for some people, it's positive because they get into home ownership wherever rates are. Their focus is, how do I get to be a homeowner? Can I afford today? Because if rates drop down the line, you can always do an interest rate reduction refinance loan with a VA loan, which is a very powerful tool, because you don't need an appraisal. You have to make a minimum of 6 payments, and it has to be 210 days from the time you took out the loan. And there's some other metrics around there as well. And I'll tell you that I've had a lot of people reach out about them getting mailers about interest rates dropping. Make sure you guys feed the fine print, because every time we have, or I'll reach out and I'll be like, "Hey, I want this interest rate too. And I'm in the business and I can't even get that rate." That should be a red flag for you when you're looking at these things. So the focus is, and when rates drop as well, Loris, this is that when rates drop, everybody and their brother comes out to, "Hey, I want to apply, I want to start buying." And when you combine that with housing inventory maybe loosening up, because wintertime, typically we see a lot more people that have to sell, because no one would in their right mind would recommend, like, let's wait till the wintertime to list the property. Normally it's some type of situation that's happening. So if you shift that dynamic to the summertime or spring and summertime, where nationally, uh, if you have a family, kids are getting out of school, that's kind of really where you're moving people. You have the largest active duty component, also PCSing across the country, across
Yep.
the world. So you have a lot of things that are competing against each other. And, I see year over year, and Laura, you tell me, like, what I see year over year is people get into the spring market gets sooner and sooner. So like we're already seeing people now that are going for the spring market because they're like, "Oh, I can, close in the beginning of a month, not make extra more, not make 2 mortgage payments. How do I position myself?" And then they're listing their property sooner. Like, what do you think of that?
Yeah, I actually have a client that reached out, and I'm so glad that they did reach out. They're going to be PCSing very soon in the next couple of months, but it keeps getting pushed back. And he was like, "Should I list before this certain amount of time?" I'm like, "Yes, because if you wait too late, then you're not gonna keep, you're not gonna have that competition as a seller." And I said, "Hey, what is your plan? Are you planning to buy?" And he was like, "No, I don't want to buy. I just want to rent when I move to my next duty station because it's very expensive." So with that being said, he's okay with like staying somewhere else temporarily so he gets the most bang for his buck and he doesn't have to have a long market time. So, and it's very area specific. Once again, we just saw a property across the way is way up in valuation, so it's just going to continue to push up with in that particular area. So he's going to be in a good position when he sells.
That's awesome. And if you are kind of in that beginning stages, I will tell you that there's two things that everyone should focus on throughout the time that you're not focusing it and on being a homeowner right now. Is one is being credit ready and being and having a proper budget. I can't stress that enough. When people ask what is the best way for me to position myself to get the cheapest money I can get, it's credit. Like hands down. So the better your credit score is, the better financing terms you get, right? That's kind of in general. And then budgeting correctly is, do I, if I make 5,000 a month but my mortgage is 4,000 a month, is that a good idea? It's not. I'll tell you that right now. But the VA loan is so loose on its requirements that people can actually fall into a category like that where they can have, we've seen it as high as like 70% debt to income ratio and still qualify for the VA loan. Lourdes, what is your take on that?
It's a little bit of a loaded question there, David.
Yeah.
But s- um, let me think how I can answer that. Well, can you rephrase the question, David?
Yeah. I mean, and I'm just saying, like, for the VA loan itself is pretty loose, right? And
Oh,
we've come across a lot of folks that say, like, hey, um I want to be able to spend up to X amount of money, but looking at it, you're like, man, maybe you shouldn't go that high because there's so many
yeah,
factors to consider within real estate, right?
yeah.
Homes may not be they might be outdated, but you're like buying at the top of your budget, but you don't have enough money saved up, right? Those are things that we're like kind of talking about. I know we've both seen it before.
Yeah.
So
So I had a client that currently owns, they're expecting a baby. They're going to be leaving in the next year. So, every time I speak with a client, I just want to say, hey, what does your next couple of years look like?
right.
And he said, I love this home. It's $400,000. It's around the corner, right around the corner. Beautiful home. I mean, just gorgeous home. And his payment would have been an extra $2,000 a month.
Wow. From the
And
current payment?
from the current payment. So his
Oh wow.
current house right now, and he wanted to upsize, but he's going to be leaving in a year. And I'm like, oh no, like that's not, I was like, if he could stick it out for one more year, it's going to be $2,000 more. So in essence, it's going to be $24,000 more that you're going to have to be making in mortgage payment. But then you have all these costs to sell, and you're going to have to start the equity all over again. So in that case scenario, I was like, it's not going to be a good situation. So just really understanding what their goals are. If he said like this is where I'm going to live for the rest of my life, absolutely 100% buy right now, because the prices in a year from now are just going to go through the roof. So
Right.
it just really depends on the situation. We have another client that the taxes are really high, like in the thousands upon thousands. And I'm like, are you sure you want to take on this property with your tax implications being so high? It is a veteran, but the VA disability has not gone in yet. But if they take away that veteran disability, are you going to be okay? And they can always take away that incentive. So that's another thing that, would you be okay with paying $30,000 of property taxes, which in certain areas it can be that much. So that's
And
like
that's
another
not for like
thing.
a $5 million home. That's for like a $500,000 home, by the way. So really, you have to be careful where you're looking at some of these taxes.
Right. Yeah. So that's my outlook on that.
That's all. Yeah, and I'm in the same boat. Like you really need to. That's why creating that the budget for yourself is really going to be important. Now, what I want to talk about next is just really preparing yourself for entering the 2025 market. There's so many different aspects of that, and each home ownership is different to every one of us, right? So it's
Mhm.
different for me, Loris. You and I totally opposite, right? You love investing. Let's try to get 500 doors. Let's try to do as much as we can. I'm on the other end where I'm like, hey, I'm happy with just having one place. I don't have to manage more people than I already have to, and I'm happy with that. And the reasons we get into home ownership is also different, right? My wife wants roots, so we got roots, right? You want to create wealth generationally through having multiple properties, and
Yeah. I don't
how do
want
you
to pay
pass that
mortgage.
down? You know what I'm saying? So,
Yeah.
like, I get that, and so everybody has their why, but it has to be a strong why, and it has to make financial sense.
Absolutely.
So one thing I'm going to talk about what you should do early on. And Lourdes, you give me some tips on, like, from a housing market, like where you should be looking for, so you set the expectation for yourself, right? And that's what I'm going to touch on, but on the financial side of things. If you are a, let's say, more a year or so out from purchasing a property, that's when it makes the most sense to reach out to someone like me to
Mhm.
walk you through your finances and just make sure that whatever you're trying to do, that you can actually do it. Lord, this is a testament, because Lourdes and I have had this happen where people are like, I am not going to do anything until I find my dream home.
Yeah.
They
Yeah.
find their dream home
They don't
and
qualify.
they don't qualify. It is mind blowing that people still do that in today's time. But if you want to get a jump on the year, you do it now, because that way you know, okay, hey, I know that I qualify. My finances are in order. The credit's the best that it's going to get. But I also may need to save up a little bit more, maybe closing costs for more than I thought. Those are all powerful things you can put in your toolbox to say, well, this is how I can shape my finances. Now, Lord, it's like, what mentally do people need to prepare for when it comes to actually looking for a house?
Yeah, that's a great point. There's a few situations. I just had a discovery call. So I have different calls that I do with my clients, but a discovery call is, hey, I'm looking to purchase another home. Guide me in the right direction. I just went from a W-2. Now I'm self-employed. I'm like, oh
Oh no.
no. I'm like, okay, well, this is the self-employment route. And not to be discouraged, because I bought a self-employment, I used my income as a self-employed individual, but I had to wait 3 whole painful years to reach my goal because I refused to get a job. I said, "I'm not gonna work for the man, or woman." I'm like, "I'm doing it on my own." So, I did that, and I constantly called my loan officer, David. So I constantly called every time I'm making a big purchase, something's gonna happen with my credit, blase, blase. I needed a car, because my car was 5 years old, and as an entrepreneur, you can't write anything off after 5 years, so, or maybe, I don't know. But, I was like, "Okay, so this
We're
is a
not
situation."
accountants.
Huh?
So we're not accountants,
We're not
but yeah,
accountants,
talk to your
so go ahead and
CPA.
talk to your CPA about that. But yeah, so I was like, should I buy this cash or should I buy this, should I, finance it? Like, what is that gonna be?" And he was like, "Whoa, whoa, whoa, finance it, but your payment has to be at this amount so that you can reach your goal." So having those conversations with the lender, with the real estate agent, to really prepare your next moves are absolutely critical. It took me 3 years, but I know now how to guide people that it wouldn't take that long unless they want to choose a route that I took. So shortening that curve is absolutely, like, imperative, I feel like,
Definitely. And
or
I
at
want
least
some you
preparing.
guys keep in mind out there, because we'll talk to people and be like, hey, by the way, did you know you could buy a multifamily? So what type of benefit, like what type of properties can you buy with the VA loan? So single family home, town home, that's where you may pay an HOA due. Normally it's typically smaller. You could purchase a condo. You could pretty much, I do a bunch of videos on it. You could buy any type of condo pretty much with the VA loan, if with a waiver, and you could buy up to a 4-unit property, and then technically a 4-unit plus a commercial space. And if you have two veterans doing a joint home loan application, then it goes up to 6 units plus a commercial space. We've never seen that executed, by the way, but it is something that's in the handbook that's possible. So mentally preparing, like, where do I need to position myself to accomplish my goals? And I'll give you guys a quick quick kind of like snippet. I had multiple calls in the last couple of days, and most of them have revolved around, I want to buy a multifamily in the next 3 to 9 months. And I love hearing that, because people are positioning themselves early enough.
Yep.
And but if you don't get it, but if you don't have your credit looked at and everything else, then you guess what? You just it's kind of, I feel like you're not really treading forward.
Mhm.
You may putting yourself in a position where you're putting a lot of time and effort into something, but not being prepared. And we've run into that as well, where people maybe financially, let's say from a credit eligibility perspective, income perspective, but they don't have the right assets to do what they want to accomplish. So again, this is why I had just having some of those conversations going. But Loris, what are some of the common, I'd say common mistakes first time homebuyers make uh, getting into the spring and summer market? Is it like, them trying to go in, hey, I'm going to go under list price? Like, what are some mental strategies people need to get ready for?
Yeah, it's that education component that you have to do. If it is a really there's certain areas where even, when the market's really high in certain areas, it's still really low and you can still get a deal. And there's others that you have to be mentally prepared. So I right now with all the current buyers that I have, we're starting to see here in the Chicagoland area, we're starting to see spring market hit. We're back into the multiple offers. It just happened literally over the last like week or two where we are starting to get multiple offers. Hey, I want to see this property. Oh, we can't because it's already under contract. It just listed, 2 days ago. It's under contract now. So we're starting to see that. So making sure that they have the funds for that, as far as like sometimes if there's a lot of competition and we want to be more competitive, then we do have to put aside some closing costs. The buyer would have to pay the closing cost or a good portion of that. So there is that. You just have to have that mental preparation just in case you need to be competitive and you really want to purchase.
Right. And, sometimes people will say, I don't want to enter the housing market because it's too competitive. The challenge is that in one hand, I understand because you don't want to go back and forth and keep upping the price. But on the other hand, if you are trying to buy in a market that's constantly going down, you're constantly going to be worried, did I get the lowest price possible? And it
Mhm.
just causes recession, a massive recession in the housing market. But even, I watched somebody else talk about it, and I'm like, man, he's got a good point. Is even if you bought in 2008 and still held your property today, and at the worst time you can buy, you would still be just okay. You'd be doing real well, in fact. So keep that
Yeah.
in mind when you're going through that home journey process, that there's a lot of components to purchasing a property and longevity, like we talked about earlier. If you're planning on living in a place for 10, 15, 20 years, you can almost write out any type of market historically, right? I'm not saying from my experience, not putting, talking about Lourdes. We're just talking about looking at the data. Like, it's just cyclical, right? Even if there's a drop, I'll
Mhm.
promise you, when across the board the real estate drops a little bit, everyone's gonna be like, the end is coming, Armageddon. We're gonna be like,
Yeah.
what are you smoking, people?
Yeah.
But yeah,
Yeah, they predicted in 2020 that there was gonna be a massive crash. I That even came out of my mouth, like, "There's gonna be a
yeah,
massive crash, blah, blah, blah." And then we saw the effect of low interest rates, and then, we got to work and
yep,
saw one of the biggest housing booms ever. And I purchased my 4 unit in 21. And so I got the low interest rate, and now I'm like, okay, I'm a little stuck because if I refinance and get the equity out of my building, which there's a ton of equity, then I have to restart my loan and my payments are going to be like almost double, David. Like I ran the numbers. I was like, this is crazy.
that's why you get a
Um,
HELOC.
I know I want to get one.
Yeah.
But yeah, so well, actually, David, let's talk a little bit about the HELOCs, because I learned a lot about those because I'm going to get one very soon. But what is your outlook on? I guess what are the pros and cons of a HELOC?
So HELOC, what Loris is talking about, is when you have let's say you're a current homeowner and you have a great interest rate and you don't want to reset that first mortgage. You can get a second mortgage, and it comes really in the form of two ways. You can get a HELOC or a HE loan. A HE loan, I'm going to answer first because it's the easiest. It's typically a fixed second mortgage. So it could be 10, 15, 20, 25, 30. All lending institutions offer all different types of products. And I recommend for a second mortgage going to like a local credit union or a local
Mhm.
bank, because they normally offer the best deals versus like the big banks. And closing costs typically are pretty low on those. Uh, the second one is a HELOC. That's where it's like a line of credit. And me personally, okay, recommend that you max that puppy out as much as you can. And I'm going to explain why. I remember, I'm not the one doing this. There's zero, like I have zero skin in the game in this, but I still recommend, me personally, get as much of a HELOC as humanly possible because of a couple of reasons. One, when you don't need money, people want to give you money. And when you need money, nobody wants to give it to you. So, one is you actually have access to capital. Two, the way it typically works is that it's a 30-year term, but the first 10 years are interest only, and that's your draw period. Again, this is kind of like a normal, but it does change based on lending institutions. But these are also things you guys need to ask a lender, like, hey, what's the draw period? How much is it interest only? What happens after the 10 years? How does it reamortize? How is rate determined? Because it does change every month. So back to positive side. So if you take out a loan for, let's say, 200,000, let's get crazy, right? You don't have to draw on 200,000. In fact, you can draw $0. You just have that line of credit sitting there. So when you need it, you can draw on that money, right? Sometimes you may be going, let's say you may be unemployed for a period of time. A HELOC can help you. You need money for a new roof. The HELOC helps you. And after those 10 years are up, guess what? You could just apply for a new HELOC and be able to get that. And I'm telling you guys, it's pretty straightforward to get them. Unless it's an investment property, then it not so much. And if it's a multifamily, not so much either. I know, Lourdes, you're like, why do you talk about me? But it's just, it's true. And I haven't seen HELOCs on land, right? So if you do have land, you typically do have that equity locked into the property. And if you guys haven't watched my video about buying land, is I think a great option to have a savings account so you can build a home later. In fact, leveraging the equity in your land to build a house is pretty sweet. I was fortunate enough to do that, where I purchased some land back before I deployed in 21. So after we closed on your place, we were able to purchase some land, and it's like 3x the amount of value. So I could let you go in and leverage the land just to do a construction loan without a VA loan, and leverage like a loan that I can actually do the construction work myself and save a ton of money on GC work, right? So yeah, so I know that was a long answer to a very short question.
Yeah.
But you asked, Laura.
I did. And one thing, when I was doing a little bit more research, I have a 4-unit, and when I tried to pull the HELOC out, and most banks won't do it. They say, "Oh, we should, we can't do it on a 4-unit." I'm like, "Why not? Like, we're getting paid to like help, pay this off." But they're very strict on that. And then how much you can pull is another thing. And then I with the loan that I qualified for my particular HELOC, it was an adjustable rate. So definitely look into if it's fixed or if it's an adjustable, what that looks like. Because if the interest rates go super high, then so does your HELOC. So be very careful. Look at all the terms. My goal was to get a 6 to 10 unit multi-unit, use my HELOC as a down payment and not do any work. I was gonna get like a full, it's already done type of thing. But then I'm all like, I really can't do that. I have to get something that needs a little bit of work. That way I can pay my HELOC back just in case if the interest rates go sky high, and then just kind of use that, rotate that money in and out, but not keep it at one place, because you still have to pay that monthly payment. Yep. And then you have your mortgage on your other payment, and it does that really make sense? So that's another thing that you have to really look at is all the details. And you can talk to individual. I called David. I'm like, this doesn't make sense to me. Have it make sense, or even the lender that you're working with to get this going. So just want to let you know that the lines of communication are open, just so that you can strategize and what's going to work best.
Yeah. And we'll definitely be doing more real estate investor focused with your VA loan here in the next couple of months. I know I said that back in January, but life has taken over. But we'll definitely be getting videos out specifically addressing how to invest with the VA loan, because there's so many options that go in it. And it's very different coming in as hey, I just want to buy a single family home. I'm going to live here. This is going to be my home. I'm going to live here for X amount of years. Very different approach than, hey, I want to invest and I want to own multiple properties. You definitely need a lot more experienced people around that. Well, you don't think you need experienced people for investing?
Uh, it just depends. I mean, it's all about having and building your team. And, when I got thrown in, I threw myself into this world. And at first I was like, oh my God. So, I had to find, the plumbers, the roofers and everything around that. But, it's not as bad. It's not that bad.
That's awesome. Yeah, someone exclamation mark dropped in the comments investing, which 100%. There's so many things that you can do with that. Now, Loris, let me ask you, one of the big things that I get a lot of questions on is especially first time home buyers, and it doesn't even make it well, even first time home buyers definitely ask, should I this next thing? Second and on home buyers are like, we're definitely doing this. And that's home inspections. That is such a big component to a home buyer that I often think that people overlook. So walk me through, what is a home inspection? The VA doesn't require this, by the way, and why you think it's a positive, like you should get it. And is there circumstances when you're like, you know what, you don't need it?
I always encourage getting a home inspection, especially if it is a single family home. Particularly, I have some people opt out of. I just had a client opt out of an inspection for a condo. It needs a lot of work, and he was like, "Yeah, I'm gonna change it all anyway. So why am I gonna pay $500 for someone to show me, and I have to replace the stuff anyways?" And a condo, it's not as much work as a single family home. So it is recommended to get a home inspection. That way you can actually know what's truly wrong with the property. Now, if we see any type of signs in some areas in this world, in the United States, there's basements. And if we see any evidence of water in the basement, I would recommend getting a sewer scope. They're going to run a line through the sewer line just to make sure that there's no cracks or anything like that. We've had a client who didn't want to I don't want to pay for the sewer scope. I don't, that's too much money. It's $400. But then when the insurance company came and fixed the damaged line, it was $30,000. So you can see that a $400 home sewer inspection can save you so much money in the end. So if you look and you see a ton of trees, if there is a possibility that the tree roots may find its way and crack your pipes, I would highly suggest getting a sewer scope. And then the other thing too is the inspector is going to go look at the roof, the walls, the windows, the foundation. Is going to scan the area just to see if there's any leaks and run all the water. This is stuff that, I'm not a licensed inspector. I'll go in and I'll say, okay, there's this, that, and the other, that, the obvious things, but they're going to be able to look at it a lot different, or with a bigger eye. And then when we get the report, you say, okay, these are the things that need to be done within the next 30 days, 1 year, 5 and 10 years. This is what we can ask the sellers to fix. This is what we are not allowed to have the sellers fix. And just having that education behind, what that looks like. And is this going to be a money pit, or is this something that's going to be, it's going to be okay down the road?
Yeah. Well, let me break down. I'm gonna share a personal story, and I'm gonna touch a little bit about property conditions, because this is such a uh, driving point for veterans not making offers on homes they actually could, and they could have passed VA inspection. So I'm gonna give you guys I'm gonna use myself as an example with this whole piece. About a year and 2 months ago, I purchased a property, and I looked at it. I'm like, this is never going to pass a VA inspection, but I still gave it a chance. Okay. Two, I did get a home inspection, and everything came back and confirmed. I guess I wasted my money because it confirmed everything was wrong with the property. Sewer line was busted. Water line needed to be changed. Um, Foundation is cracked. It all kind of needs to be dug out, report. Okay. I knew that coming in. And all those problems I just described, I mean, the roof had to be, roof needs to be replaced, the siding needs to be replaced because it's peeling, uh, tuck pointing is required. All those negative things I said still passed the VA appraisal without a single thing being brought up. Okay. But on the flip side, I understand that what value I got for the property, I could literally do a renovation and get my money back, which I just confirmed that this week because I got an appraisal done. Hey, like, hey, this is how much work and money we're putting in. And the appraiser's like, yes, that definitely makes sense. You're still going to have equity once you finish. So that made me happy. But having that right team, you can at least put yourself in that position. But those things are a bit risky. So don't let an outdated property stop you from buying a property. Lourdes and I just did a video talking about the, like one of the top things or top, what do you say, top things sellers agents are like, no, no, no to VA loans is because they think the appraisal is just so horrendous.
Yeah.
And even if it comes back that things need to get fixed, sometimes you can do escrow holdbacks if they're not safety concerns. I'm not an attorney, but like we've done it before. And Lourdes and I have done it before on deals. So just make sure when you're going into a transaction, ask your lender, can you guys do escrow holdbacks for VA repair items that the VA is required to do? So those are things that you need to kind of think of. And someone asked, Jackie asked, I didn't have a sewer scope on my own home and had a crushed line that cost $40,000 in damage and was backed up into my house. That is savage. Now they have these backup sewer things, which are not expensive. Like since I'm doing a remodel that's almost like 95%, they're making me put in this system that will automatically stop any type of backup into the house. But still, $40,000 for that kind of thing, that's wild. So kind of keep that in mind in that piece. And I just want to touch. We should have never talked about investing with a VA loan, because this is a subject that I love, because there is nothing that says that you can't invest with your VA home loan. It's designed to be your primary residence, sure, but there's no minimum time limit that you have to live there. So some people really know how to leverage the VA loan, and that's what we're going to be talking about in our upcoming videos and classes and stuff like that. Lourdes,
Yes.
For the people that are out there that own a property that are thinking about selling or they need to upgrade, it's tough, because if you were to turn around and sell your home and buy another one, and let's say you put no money down, in theory, your mortgage payment would be double. If you had like a really low interest rate, right? Oh, so my Siri is starting to act up on my phone. Yeah, Apple Play. Yeah, so Lourdes, like, what message do you have out to people out there that are really like looking? They own a property. They're kind of in this middle ground of do I sell? Do I not? Do I rent? Do I buy?
Yeah, I think it goes back to what I said a little bit earlier, is really knowing your plan and what is your next year, 3, 5, 10 years look like, and then make the best decision. Now, there's a ton of, and we've had 2 clients that, you know, purchase starter homes. And when we first met, what is your plan? Oh, we just want a little starter home, and then we're going to get a dream home once, we get settled into the area. They move here because of a job transfer. So they don't want to, get their big dream home and, only on one income. Now the spouse is working. So now they can get their dream home. So they've kept those as rental properties, where not only are they continuously building the equity in their home, they are able now to get my beautiful language, it's called cash flow, get some cash flow on their property, get some additional money that's going to help them pay off their mortgage, their new home with their property. So it really depends on so many factors. What is your current interest rate? Would you cash flow? Is it going to be an asset, or is it a liability? Is there too much maintenance that needs to be done to the property that's going to put you in the red? Things like that is something to consider. And looking, are you planning to stay in the area? Are you moving? You know, is your family size increasing? Is it decreasing? Are you gonna, pop out some more kids? Are you gonna have some more kids, or are you gonna be an empty nester? So there's so many things that go into play that will help you make your decision. So that's why, like I said, I do a lot of discovery calls, and I just sit down and we say, okay, this will be the best route. What would you like to do?
Right. And yeah. So definitely a lot of pieces with that. And you guys really have to kind of consider which route you want to go down. And you opened up a very good segue to talking about some of the VA benefits that people have that even today people don't realize. And I get this one all the time is that I have to sell my current home to use another VA home loan. It's a common misconception that has been around forever. You can technically have unlimited VA loans at the same time. You can't take like 10 VA loans out at the same time, like literally the same time, but you can have 10 VA loans if you want. What it comes down to is how much entitlement you have. So, like the example that Loris is giving is that people came in and they started with their starter home. They spent a couple $100,000. They purchased it, and loan limits over time have gone up because two sets of rules. You don't have an outstanding VA loan. There's no limit on what you're able to purchase as long as you're eligible, meaning you don't have an outstanding VA loan and you meet the time and service and character of discharge.
Yep.
And the qualification is can you actually make the payment? Do you have the credit? Does the property meet the appraisal requirements? And you have enough money for down payment, right? So if you have that, you kind of can go 5 million if you want, and you meet all those requirements with no down payment. But if the opposite happens when you have multiple VA loans, it goes based on a single family county loan limit. Now that is technical, but on the channel, we have a whole video talking about multiple VA home loans. So
Yeah.
don't disqualify yourself. Reach out and talk to somebody. Lourdes, you and I have seen many times people disqualify themselves,
Oh my gosh.
and they could have been homeowners.
Yeah, even me. I wanted my dream car, and Mr. David was like, "You're not gonna have a $1,200 payment, ma'am." And I'm like, "But
No,
I really want." I was like, "What is the payment?" And I think you said 650. I was like, "What am I gonna get 650 a month?" So I kept as much cash as I want, but at the end of the day, I was like, "Look, this is what I want. I really want this property, and I don't want to." And literally after I closed, I bought my mom a car, and now my payments are $1,000 for cars. But I bought my mom a car too because David helped me, have that budget, set that budget to achieve my goal, and I'm not way over. And I actually finished paying it off because I've always been overpaying my car,
that's awesome.
which I just want to kind of get that knocked off. And now I'll be car free. No more paying for me.
That's awesome. And leading with that, I want to give you guys just a little bit of tip. Recently, I was talking with somebody, and because I bought a place like a year and a couple months ago, and I also did a 30-year mortgage. And someone called me and said, David, I want to figure out, I have extra money. What can I do with that money? And so we looked at that mortgage payment, and I'm like, you know what? For $1,000 more a month, because you just paid off your car, for $1,000 more a month, you can cut your payments in half. So from a 30 to a 15-year. We ran the numbers, and it was wild on how much interest and money you save. So when you're bored, look at a calculator online and throw in what your current mortgage payment is. Do the reverse math. You have to use the original balance that you have, not the current balance. Original balance, original term, original payment. And throw in what it would look like to make a 15-year mortgage payment. And for folks out there that are currently homeowners that locked in really low interest rates, you will be mind blown on how much faster you could pay off your mortgage and be debt free. For some people, again, if you currently own a home, you may drop down to a 10-year mortgage. I've seen people pay off their house in 6 years, especially when they bought like early on and they refinance with lower interest rates. Now, today, rates are a little bit higher, but still you can achieve that by not having, if your balance is high, yeah, it's going to be a huge difference. But like Lourdes's point, we have people that do step up, right? They keep their current property, they rent it, they make a couple $100. We've seen people make $1,000 a month. They take that extra money and they reinvest it into
Okay.
their current mortgage, and either because like everyone's angle is a bit different. You're worried that you don't want to overstretch your budget, so you just take that $1,000 and apply it towards your regular payment, so you're not overpaying. That's cool. Everyone's situation is different. The opposite is, hey, I'm in a good financial position. I want to take extra money that I have. What do I do with it? Do I invest in the markets? I'm not a financial advisor, but like, do you do that? Do you put money towards a 401k? Do you put money towards your mortgage? And guess what? For some people, they could do all those things. For others, you really need to sit down with a financial advisor and kind of figure really where is it that you want to be, right?
Mhm.
And I know, Lord, it's like that's something we always tell folks is like prepare for that. Talk to a CPA, especially we're in that tax time right now. But how do you position yourself to pay the least amount of taxes? What tax implications you have? And I can't stress enough about the VA disability component to it. If you're a homeowner and you want to file for your property tax exemption, make sure you check if there's any new laws in your area, because sometimes there's a delay to get your tax benefits. And I don't know, Lourdes, we've run into that a lot, especially in depending on where a veteran lives.
Yeah.
Some states and counties, it's like, hey, you bought a house this month, next month, guess what? Nope, you don't pay anything. Other areas, it's like you buy this month, like today, and you're not exempt to like September of 2027. That's sad.
Yeah. Yeah, it's super messed up, and hopefully they change it. I was just talking to somebody about that yesterday. Is I just don't understand why certain areas pay taxes in the rears. When I lived in Washington, to my knowledge, I can't remember. It's been some time, but I believe we paid like the taxes like now, like in when it's due, like at the beginning, not like a year later. So that is like one of the things that I think should be imposed here, but I don't know if it's ever going to happen.
No, I know. Every area is different. Now, Loris, let me ask you. A lot of people, this goes both for buyers and for sellers. They always want to know what is the value of my property. Buyers are like, well, how do I know I'm making the right offer price? And sellers are like, well, if I were to sell my place today because I want to move somewhere warmer like Arizona or Florida or wherever, that's warmer than where Chicago is. They always quote like, well, I went online and my estimate says this, and oh, this month from last month it went up 100,000. Now I'm going to be making it rain. Lord, just walk me through what goes into, and I'll chime in myself from like a lending appraisal perspective. But how does someone really understand if they're making the right offer on a property value wise?
Yeah, so it's really important to have your real estate professional run what's called the comparative market analysis, where you're going to look 6 months back within a 1 mile radius. In some areas, if it's very rural, then you start to go, 2, 3, 4, 5, whatever it takes to find like properties, and really identify if it's apples to apples, because we can't do an apple to an orange as far as valuation. Because what's going to happen is the appraiser is going to come in and run these same parameters, and they're going to say, this is the value of the home, and the bank isn't going to pay more than this. If you want it, that's cool, but you have to gap the difference. And it kind of gets a little rocky in the transaction. So it's really important to have your real estate professional run a market analysis and be able to give you the actual factual details. That way you can go ahead and you can make an educated decision.
And that's normally a CMA, right? The competitive market analysis is normally a range, right? It's not like this is to the exact dollar that you're going to get. It's like sometimes it's a 10,000 spread, sometimes it's 50,000, right? It just kind of depends. Or is it closer in number?
It just depends if there is very similar homes. Like I had a property and the next door home sold for X amount. we're able to get very close to that valuation because it was literally next door, sold within the last
Gotcha.
6 months and stuff like that. So if it's apples to apples, then the valuation is going to be pretty much spot on. If it's not, then we'll have a little bit of plus here, plus or plus here, minus there, and then they start to look at square footage, basement, bathrooms, like so they start to do plus and minuses when it comes to those things.
Yeah, and that's a challenge with people that are purchasing unique properties. Is that sometimes, like I talked to somebody, this was on Saturday. They're like, I'm trying to buy this property. It was in Texas. It was so unique, and it technically had a dwelling on there, but it didn't. It was more kind of like an RV port with like a tiny home on there. We're like, man, there's no comps in this area at all that could even support that. And we weren't even able to utilize a VA loan on that property. So just kind of keep in mind that what you're trying to accomplish, there's maybe different loan programs that exist, because the VA loan itself is phenomenal, right? We always encourage you to use it. But there could be a time where you're like, man, this property may be suited better for a different program. Or if you're trying to stack different benefits, and we'll be doing these through our live events and like static videos, talking about investing with a VA loan and what options actually exist within that space for that piece. Laura, is there anything that you'd like to add before we wrap up for the day?
That's Let me see if there was anything that I really wanted to jump into. I think we covered
covered a lot of subjects for sure.
Yeah. Yeah.
So if you guys have questions after this, please drop them down in the comment section. Check out the channel, VA Housing Education. There's a ton of videos that we have around almost every aspect of the home buying process. And if we don't, drop a comment, because we'll actually go in and create the content or go on a live stream. And if you guys want something for your office, active duty component, National Guard Reserve component, we do live events or Zoom events for individuals across the country, across the world, in fact. So always happy to help our fellow military members. You guys have a good night, and we'll catch you guys.